Hey, good morning, everyone. Morning. Hey, Kevin, all the way from Florida. Evening to you. Alison, good morning. Tim at the Pan Pacific, say. What are you competing in? Tim, Pan Pac Games. Is it Pan Pac Games? Is it triathlon? It's some competition, isn't it? Anyway, sorry if I'm not up to speed, Tim, but good to see you. Hello, good morning. Hey, good morning, everyone. Welcome to another Wealth Coffee Chat. Good to have you here. Hope you've had a good weekend. Athletics throwing. Oh, there you go. Good to see that's happening, mate. Good to see you're out there active. I'm down in Sydney in a couple of weeks' time at the Australian Open Australian National Championships for climbing, rock climbing, and bouldering. Anyone knows what that is. I'm the official commentator of the national climbing competition. There you go. And we'll be live streaming. If you're interested, track us down at Australian Sports Climbing. Anyway, there you go. Good to see Tim. Jeff, how are you, mate? All the way from the coal mine. There you go. Good work, Alison. Everyone's getting their exercise mojo on. Summer's coming up. You've got to get the summer bod ready, right? Anyway, enough about that. You guys are here to talk about something else, I'm sure. But before we get going, if you're new, welcome along. Jason Witten's my name, as it says right there. We've been doing... Well, that's the idea, Jeff. That's the idea. Going to give it a crack, see if I can Olympic commentate in 2032. We shall see. Welcome along. If you're new, like I said before, we've been doing these Wealth Coffee Chats for a little while now. Each morning we get together and have a conversation, some pontification, some chats, some thoughts about the world of investing, about the world of property investing, maybe some investing in general, some other things too. So if you've got any questions, whack them in the chat. If you're new, say hello, tell us where you're from. And, each day, come and join us live. Or you can chase these things up afterwards. They do get turned into a podcast, by the way. We put them on the private Facebook group. We put them in YouTube and Spotify and iTunes. So you can track that down if you miss the times. Hey, Brendan, good morning to you. This morning I thought we would talk about capital growth. It's been a pretty good run the last little bit. And certainly when you have a look at charts and statistics, it's been a pretty good run since the late 90s, early 2000s. And there's some commentary around what has fueled and accelerated significant capital growth over and above wage growth in the last decade or so. Tell me, in the chat, this might be use your brain. Get in there. Have some deep thoughts. What has accelerated? Well, there are some comments around what has accelerated housing prices over the last decade or two, over and above wages. Tell me, what do you guys think? What is the common conversation, or not so common, but a common conversation about what has accelerated housing prices? And I can tell you it's not population and supply and demand and things like that. It's one thing is the argument about general immigration. That has helped. That certainly has helped. Yes, immigration certainly has helped. Anyone else got any thoughts, ideas? Any thoughts or ideas? Lack of available stock, supply and demand. A little bit, Jeff, a little bit. Yeah, certainly government incentives have given it a bit of a nudge of times as well, Tim. Let's have a little look at this. So, over the... Maybe I'll just see what's going on here. I think... I'll just adjust my... There we go. Going to adjust this a bit so we can see the drawing. I don't know what's going on there. Let's see. There we go. A little bit more. Stand by, folks. Technical difficulties in the house. All right, let's go here, out there. All right, we should be okay now. All right, back to it. Let's have a look. All right, so I'll lock that up, and then away we go. So let's have a look at this. You can see something around here. If we look at a chart that's supplied, well, this is ABS statistics. If we look at a bit of a chart of recent times and past times, something happened around here. You can see the real average full-time earnings of an Aussie. Hasn't done anything spectacular for a while. This is it here, traveling along at a low trajectory. But something really kicked off in this section, and house prices and asset values accelerated. Like, we're not there yet. No one's got it yet. And look, listen, this is just a pontification today as well. I'm certainly not a full-blown economist, but as Andy and Fenton and I said, economists are someone who can get it wrong all the time and still keep their job. So there you go, maybe. Anyway, what is it? What is it? Let's have a look. And the conversation I have heard many times with capital growth in the world of property and property investing. Yeah, something's weird going on today with my little chart here. I'll have to adjust it a bit later, folks. So, but you can see here, hopefully you can see, that I'm going to adjust it now. That's going to annoy me if I don't. All right, here we go. It's going to annoy me if I don't. Sorry, stick with me. We shall get there in the end. All right, hang on. Not quite sure why this is doing some weird things today, folks, but now it's blacking in and out. Anyway, there you go. Anyway, I'll stop mucking around with it. What's happened when these property prices have now accelerated quite significantly over a certain period of time? Good trajectory. Internet, yeah. Actually, you know what happened? I think I've told this story before, but I'll tell it again in a second. What has happened? If you look at this, and this is a conversation I've heard plenty of times, right? From about 2006, well, probably for a long time anyway, for well over many, many years, interest rates have declined, folks, a long way. But if you look around this sort of 2006, 2008 section here, from a 10% interest rate, 10%, down to a 2% interest rate. So when you have a bit of a sticky beak you put these two together, have a look at this section here. That's gone down and that's gone up. Oh, come on now. Come on now. Anyway, technical difficulty this morning. So the conversation has been, and I've heard this quite a lot in my circles, is that, all right, well, cheap money, basically, team, cheap money, low interest rates. No, that's no good. Low interest rates, cheap money has fueled capital growth, cap growth. Fueled cap growth. So the conversation has been, it's like being a a growth led not by somebody's wages or ability to purchase or borrow, but their ability, not their wages, but their ability to borrow. Their ability to borrow has helped fuel this growth over time. Now, the conversation is, what would be the conversation? What would be the question right now? A little bit of super funds investing too, Jeff, absolutely. There's a lot of money in the Australian system as well. What would be the question right now when we're sitting here and going, for the first time in over a decade, interest rates have gone up. Full-time earnings aren't necessarily going up as fast. What's the conversation? What is the conversation right now about the marketplace? And you can see here as well, from about this time as well, you can see CPI and rents as CPI went down, or rents didn't grow as much either. So what happened is rents didn't grow as much for the last 10 years. Interest rates went down and we were fueled. There we go. So inflation, yeah. So the next disaster, cheap money starts again and boom, yeah. So the conversation is this. Will we get capital growth into the future? The answer is yes. Excuse me. Will we get capital growth into the future? The answer is yes. But where will that growth come from? Okay? Where will that growth come from? And it's going to be driven by something that Sam has talked about for a long time. What's going to drive, excuse me, what's going to drive the next growth cycle in the world of real estate? And probably, I would say it's going to be fairer. I don't know, is that a right word? Fairer. It's going to be a much more fair growth process when we come to the world of property investing. Tell me in the chat, what? Jeff is all over it. Flight to quality. Flight to quality. Folks, when the interest rates are higher and you can't just buy any old thing, the flight to quality conversation is going to win out. There is no doubt about this conversation. If you want growth into the future, and this is Sam's call, this is certainly my call as well, into the future, if you want capital growth, you're going to have to understand what flight to quality means when it comes to, immigration numbers. Flight to quality means when it comes to growth of your real estate. So let's break down flight to quality in a bit of a sequence, all right? First, flight to quality. What does the flight to quality mean? Folks, put that in the chat. We're going to sort of break it down. Flight to quality is built around certain things, right? Sam talks about these as we go, right? And let's talk about the first one. It's the good old adage, talk about the idea, it's location, okay? And more importantly, we call it the proximity of profit, okay? The proximity of profit, folks. Boom, Chris is on it. The location. Right, if you're going to be out the middle of nowhere, stuck in traffic jams with poor amenity, etc., then your growth is going to suffer, okay? Location. Now, there's 3 belts. The closer and I'm not going to dive into this today, but the closer you can get to something that you want, the distance from a CBD, and it's broken down into 4 belts, right? Here we talk about the belts, talk about the green belt, the medical belt, the education belt, and the not water, beach, or whatever he calls it, beach. Let's just call it like that, right? So these belts of employment or location, okay, as we go. So you're going to have you need to get a great location. Folks, don't go Sandbelt. That's it. Having a mental blank. Thanks, Chris. So don't go in the middle of nowhere with no infrastructure, no shops, no schools, and, expect growth to come from your property when people are stuck in traffic jams and there's nothing around, okay? That's not going to happen. So more than ever, more important than ever, when money is not cheap, quality will drive the value, and then based on or dovetailing into supply and demand, where there is less supply, things have already been filled in infill suburbs and stuff like that. We're talking about one now, one of the deals we're doing in Point Cook. It's the last spot within 20 kilometres of Melbourne you can get a house with some land. It's the last spot. Like we said in Pollara. Pollara's gone. It's gone from 400 to 900. Anyway, so location, team. You need to be in the right location. What next? What else will drive, based on the quality, what else will drive the values into the future, right? What else will drive the values? And Sam talks about this as well. Design-led growth, okay? The design of the property, the design of the building, okay? Not boxy pieces of rubbish that are badly designed and so on. You need to make sure the design works well. Yep, I think you'll be crushing it with Kangaroo Point, Alison, as well. And Alison, did you know that Kangaroo Point is one of the suburb locations that they have nominated that you can carte blanche do Airbnb in and around that location? You're in an ARIA building though, so ARIA restrict that, unfortunately. Maybe at the Olympics you can do something different. Design-led growth. Something beautiful, amazing design. Something people would go, oh, wow, I want to live there. Why, using Alison's example right here, why does a developer like ARIA, who designs amazing buildings, why is their average two-bedroom unit price $150,000 more than the building right next door? Right next door. It's the same location. It's got the same view of the city, folks, right? Same location because of the design, the quality, and the capacity of that building to attract people's desires when it comes to wanting to own that property. And last but not least, and it's not last by any stretch of the imagination, how does quality, flight to quality, express itself in these things? You've got your location, you've got your design, and the idea of, cash flow flexibility. All right. Sam doesn't talk about this a lot, but it's the ability for your property to be flexible in its cash flow profile, where you can make sure it can earn a decent buck, right? The ability to furnish it, short-term let it, multi-tenant it, those sorts of things as well. So listen, folks, do we have growth ahead? Are we going to get capital growth ever again? The answer is yes, we will, but it won't be driven by cheap money given away. Matter of fact, the government's going to weigh in and build a heap of rubbish property to try and make up the gap when it comes to the shortfall, like they've said in the budget. That's going to be a disaster as well. You watch this space. Anytime the government gets involved in housing, they can cause a disaster. They should stay out of the way, and they should stop making it bloody hard for the open market to just provide the stock to the market. Anyway, that's Wealth Coffee Chat done and dusted, folks. Will we get growth? Yes. It's going to be driven by flight to quality. Don't kid yourself that it's not. Don't chase cheap rubbish a million miles away from good spots. Anyway, there you go. Done and dusted. Wealth Coffee Chat over and out. Join me tomorrow for another one, folks. Remember, a couple of sayings around here. This thing's a marathon, not a sprint. It's going to take time to build your portfolio. It will. There's no get-rich-quick scheme when it comes to property investing. Not going to happen. And at the end of the day, you need to buy something really well, something good, and don't bloody sell it. The idea is keeping that real estate for as long as you can, if not forever. So then you can create passive income and wealth for your future. Anyway, that's it. Done and dusted. Join me tomorrow, folks. You guys be awesome. Be well.